Florida's sunshine dream is burning out in 2025. Landlords who once bragged about easy profits are now drowning in red ink, slashing rents, and watching their gold mine investments turn into money pits overnight. Rents are plunging by 6%, 8%, even 10% year over year. Insurance bills are exploding past $20,000 annually, and inventories are swelling by 70% to 90% as desperate owners dump properties at fire sale prices. What was once America's hottest rental market is now collapsing into chaos. In this video, we'll reveal 12 Florida rental markets crashing the fastest right now. Number 12. Tarpon Springs. Tarpon Springs might look like a charming waterfront town with sponge docks, Greek bakeries, and tourists snapping photos by the harbor. But peel back the postcard image, and you'll find a rental market imploding at frightening speed. Rents here have fallen by a staggering 7.3% year over year, one of the steepest drops for a small Florida city. What's even more shocking is the supply side. Inventory has exploded by over 500% compared to pandemic lows. That means landlords who once had tenants fighting over limited listings are now begging people to sign a lease. Entire blocks have quietly turned into what locals call shadow inventory. Roughly 1 in 4 homes in certain Tarpon Springs neighborhoods sit vacant, neither owner-occupied nor successfully rented. Many are owned by out-of-state investors who jumped in during the 2021 frenzy, paying $350,000 to $450,000 for homes that now rent for barely $1,900 to $2,100 a month. Add in Florida's notorious insurance hikes. Policies here can top $6,000 annually, and you're staring at negative cash flow before you even pay property taxes. One local property manager said it bluntly: "We've got landlords giving 2 months free rent, waiving security deposits, and still watching their homes sit empty." Listings that once moved in 11 days on average now languish for 6 months or more, with desperate price cuts slashing rents by another $200 to $300 a month just to attract tenants. Tarpon Springs is no longer a cozy Greek fishing town for investors. It's turning into a cautionary tale of what happens when hype collides with financial reality. Number 11. Tallahassee. Florida's capital, Tallahassee, was once considered a stable rental market thanks to its universities, government jobs, and steady flow of students. But 2025 has shattered that illusion. Rents have dropped by 5.1% year over year, with the average now hovering around $1,450 a month, down nearly $80 from last year. That might not sound huge until you factor in exploding costs. Insurance premiums here are up 28% year over year. Property taxes climbed another 6%, and vacancy rates are climbing fast. The problem? Oversupply colliding with shrinking demand. Developers pumped out thousands of new apartments between 2020 and 2023, expecting endless enrollment growth and government stability. Instead, many state workers are working hybrid schedules, cutting rental demand, while students are crowding into cheaper shared housing. Today, Tallahassee has 3,200 rental units sitting empty, nearly double the inventory from 2022. Landlords are panicking. Properties that once rented in a week now sit for 60 to 90 days, forcing owners into desperate concessions, free parking, waived deposits, or cutting rents by $150 to $200 a month. One landlord summed it up: "I bought 3 rentals at $220,000 each, expecting $1,800 in rent. Now I'm getting $1,450, but paying nearly $2,000 in monthly expenses." Negative cash flow is spreading like wildfire. Tallahassee's safe bet reputation has collapsed. Investors banking on steady student and government demand are now staring at empty apartments, shrinking rents, and mounting losses. The state capital has become a financial graveyard for landlords who thought they were immune. Number 10. Hollywood. Hollywood, nestled between Miami and Fort Lauderdale, was once a hotspot for first-time investors chasing Florida's sunshine dream. But in 2025, that dream is unraveling fast. Rents have collapsed by 6.4% year over year, pushing the average monthly rent down to about $2,750. On the surface, Hollywood's beaches still sparkle. But behind the scenes, landlords are bleeding cash. The pandemic boom saw investors from New York, California, and even overseas snapping up condos for $400,000 to $600,000, expecting easy Airbnb profits. That bet has turned toxic. Short-term rental occupancy has cratered, forcing owners to flood the long-term market. Today, nearly 60% of new listings in Hollywood are investor-owned properties being dumped as owners scramble to escape losses. Inventory is up 83% compared to last year, and units are sitting for months unsold or unrented. Insurance is the real killer. Premiums in Broward County have jumped 65% since 2021. One condo owner revealed their monthly expenses are nearly $3,800. Mortgage, HOA, insurance, taxes, while their unit rents for only $2,750. That's a $1,000+ loss per month. Unsustainable for small investors. Landlords are resorting to extreme concessions: free rent for a month, gift cards for new tenants, even paying utilities just to fill units. Yet, vacancy rates are rising. Hollywood's once golden real estate market is now a nightmare. What was marketed as a safe bet between Miami and Fort Lauderdale has become a trap where investors are drowning under expenses while tenants hold all the negotiating power. Number 9. Riverview. Riverview, a booming suburb of Tampa, was ground zero for new construction during Florida's pandemic-era frenzy. Developers built thousands of shiny new homes, betting on endless demand. But in 2025, that pipeline of houses has turned into a crushing oversupply nightmare. Rents here are down 8.2% year over year, with the average lease falling to about $2,299 a month. That's a $200 drop in just 12 months. Meanwhile, inventory has surged by a jaw-dropping 112% compared to last year. Even worse, new construction inventory alone is up 145%, flooding the market with homes investors can't rent out. The result? A race to the bottom. Property managers report landlords offering 2 months free rent, waiving application fees, even throwing in perks like free pool service just to fill vacancies. One investor who bought a $380,000 new build in 2022 expected $2,700 in rent. Today, he's lucky to get $2,300, while his monthly expenses top $2,800 thanks to rising insurance and taxes. That's a $500 loss every month. Vacancy times are ballooning too. Homes that used to rent in under 2 weeks now sit for 45 to 60 days, with desperate owners slashing prices again and again. Many are panic listing their homes for sale, but with inventory flooding Riverview, buyers have the upper hand. Riverview was once hailed as Tampa's fastest-growing suburb. Now, it's a battlefield of for rent and for sale signs, where oversupply, falling rents, and rising costs are gutting investors who thought they struck gold. Number 8. Daytona Beach. Daytona Beach was once marketed as a cash flow dream. Tourists, college students, and retirees kept rentals buzzing year-round. But in 2025, the tide has turned, and landlords are drowning. Rents here have dropped 6.1% year over year, pulling the average monthly rent down to just $1,750. That's nearly $120 less per month compared to last year, while ownership costs are climbing. The culprit? Oversupply and waning demand. During the pandemic, investors scooped up beachfront condos for $280,000 to $400,000, banking on Airbnb profits. Now, short-term rental occupancy rates have crashed below 55%, forcing owners to flood the long-term rental pool. Today, nearly 3,800 rentals sit on the market, up a brutal 72% from last year. Meanwhile, insurance premiums in Volusia County have exploded, with many condo owners paying $5,500 to $7,200 annually, double what they paid 3 years ago. HOA fees are also skyrocketing as buildings scramble to meet post-collapse safety regulations. For many landlords, monthly expenses of $2,300 to $2,500 are colliding with rents under $1,800. That's hundreds of dollars lost every single month. Vacancy rates tell the rest of the story. Units that rented in 14 days in 2021 now linger for 90 days or more, forcing deep rent cuts and desperate concessions. What was once billed as Florida's tourist paradise is now a graveyard of for rent signs. Daytona Beach. Investors are learning the hard way that when the tourism machine slows, the rental market collapses with it. Number 7. Cape Coral. Cape Coral's postcard canals and boating lifestyle once drew investors from around the country, but post-Hurricane Ian, the rental market has collapsed into chaos. Rents here have fallen a devastating 7.6% year over year, with the average monthly rent at $2,291, down nearly $190 from 2024. The real disaster is insurance. Many Cape Coral homes are either uninsurable in private markets or forced into Florida's Citizens Insurance Program, where premiums have surged 12 to 18% annually. Landlords now pay $7,500 to $9,000 per year in insurance alone on properties that rent for under $2,300 a month. Add property taxes and maintenance, and cash flow has turned deeply negative. Inventory is swelling too. Home listings are up 86% year over year, with much of that increase in just the past 6 months. Investors who bought homes for $350,000 to $450,000 in 2021 are panic listing, hoping to cut losses before prices collapse further. One landlord admitted, "I lose $600 every month. I'm just praying to sell before foreclosure hits." The oversupply is crushing rental demand. Vacancy times have stretched from 20 days to 75 days, with landlords slashing rents by $200 to $300 just to attract a tenant. Even waterfront properties, once the crown jewel, are sitting unsold or unrented. Cape Coral's rental market never truly recovered from Ian, and now, with costs surging and demand evaporating, it has become one of Florida's most toxic markets for landlords in 2025. Number 6. Boca Raton. Boca Raton was supposed to be untouchable, the playground of the wealthy, immune from downturns. Yet in 2025, even Boca's luxury rental market is bleeding. Rents are down 5.2% year over year, with the high-end segment collapsing by nearly 12%. The average rent has dropped to around $3,200, while costs are climbing fast. Investors who bought luxury condos at $1 to $2 million during the pandemic migration boom are watching their margins vanish. HOA fees in Boca's upscale buildings now average $1,000 to $1,400 per month, while insurance premiums for waterfront properties have doubled to $18,000 annually. That means some landlords are paying over $6,000 a month in expenses on units that might only fetch $5,000 in rent. Negative cash flow is inevitable. Inventory has surged 68% year over year, with luxury properties languishing on the market an average of 189 days, more than double last year. Investors who once bragged about zero vacancy rates are now cutting rents by $400 to $600 a month just to get tenants in the door. And the pandemic migrants who once fueled Boca's boom? Many are moving back north. As one relocation agent put it, "The Florida experiment failed for a lot of people. They're going back to New York and California." That exodus is leaving empty condos, desperate sellers, and a luxury market in freefall. Boca Raton proves no city is safe. Even the wealthiest enclaves are now suffering in Florida's 2025 rental collapse. Number 5. Tampa. Tampa isn't just struggling. It's the epicenter of Florida's 2025 rental collapse. Once hailed as one of the nation's fastest-growing rental markets, Tampa has seen rents fall a brutal 8% year over year, dragging the average monthly rent down to $2,750. That's nearly $240 less each month for landlords who were already battling skyrocketing costs. During the pandemic, Tampa rents soared by over 40%, drawing a flood of investors paying $400,000 to $600,000 for single-family homes they believed would cash flow forever. Now those same homes sit in the red. Insurance costs in Hillsborough County have spiked to $6,500 to $9,000 annually. Property taxes have climbed 8%, and mortgage rates locked above 7% are crushing profitability. Inventory tells the story. Tampa's rental and resale inventory has surged 65% year over year, with nearly 1,800 units on the market. Landlords are dumping properties at massive losses, creating a vicious cycle. More listings push prices and rents even lower. One landlord who refinanced in 2022 put it bluntly, "I used to clear $600 a month. Now I lose $400. To avoid vacancies, owners are offering unheard-of concessions, free rent, waived deposits, even prepaid utilities. Yet vacancies are stretching past 60 days, up from just 2 weeks during the boom. Tampa went from a gold mine to a money pit almost overnight. What was once Florida's hottest market is now a graveyard of "for rent" and "for sale" signs, swallowing investors who bet on endless growth. Number 4. Ocala. Ocala, nicknamed the horse capital of the world, looked safe compared to Florida's coastal bubbles. But in 2025, the cracks are showing fast. Rents here have declined by 4.7% year over year, with the average now at $1,550 a month, down from nearly $1,630 in 2024. For a market built on affordability, that's devastating. The problem is oversupply without matching demand. Developers pumped thousands of new rentals into Ocala between 2021 and 2023, anticipating population booms. But population growth has slowed, while insurance premiums have surged 35% in just 2 years. Many landlords are paying $3,000 to $3,500 annually on insurance for homes renting at barely $1,500. Add in property taxes and maintenance, and margins vanish instantly. Vacancy rates are climbing sharply. Units that rented in 2 weeks in 2022 now linger for 45 to 60 days. With inventory up 54% year over year, landlords are slashing rents by $100 to $200 a month just to lure tenants. One investor shared, "I bought a duplex for $260,000 expecting $3,000 in rent. Today, I get $2,500 but expenses top $2,700. It's a losing game." That story is repeating across Ocala, especially in newer subdivisions. Ocala's appeal as a budget-friendly safe haven has crumbled. What was marketed as Florida's affordable bet is now a dangerous trap for investors bleeding cash in a market that simply doesn't support them anymore. Number 3. Fort Myers. Fort Myers was once the darling of Florida's Gulf Coast, a city where seasonal demand and tourism made rentals a sure bet. But 2025 has rewritten the script. Rents here have plunged 6.7% year over year, with the average monthly rent sliding to $2,245. That's nearly $170 less per month for investors already squeezed by skyrocketing expenses. Hurricane Ian's aftermath continues to haunt Fort Myers. Insurance premiums have tripled since 2021, with many landlords paying $7,000 to $10,000 annually just to stay covered. For properties renting below $2,300 a month, those numbers simply don't add up. Property taxes have also climbed 7%, while maintenance costs on storm-hit homes eat through any remaining margins. Inventory is swelling fast. The number of homes for sale has jumped 74% year over year, much of it investor-owned rentals bleeding cash. Vacancy times have stretched to 75 days on average, with landlords slashing rents by $200 to $300 or offering free rent to attract tenants. One investor summed it up grimly. "In 2020, I cleared $500 a month on each property. Now I'm losing $400 on the same homes." That shift from cash flow dream to cash flow nightmare is scaring landlords out in droves. Fort Myers, once a Gulf Coast jewel, is now a warning sign for every investor in Florida. The combination of falling rents, soaring costs, and hurricane scars has turned this former boomtown into one of the state's most toxic rental markets. Number 2. Orlando. Orlando has always been considered recession-proof. Disney, Universal, and millions of tourists each year supposedly guaranteed stable rents forever. But 2025 has shattered that illusion. Rents here have fallen 6.5% year over year, dropping the average monthly rent to $2,000, down from $2,140 in 2024. For landlords, the math is brutal. The short-term rental market is oversaturated. Airbnb occupancy rates have collapsed from 80% in 2022 to just 58% in 2025. Thousands of investors who bought during the travel rebound have been forced to convert properties into long-term rentals, flooding the market. Residential inventory has surged 72% year over year, one of the steepest spikes in the nation. Costs, meanwhile, are climbing. Insurance premiums in Orlando are up 24% in just 1 year, with average annual policies topping $5,200. Property taxes are also climbing 6 to 8% annually, wiping out what little cash flow remains. Many landlords who bought at $400,000 to $500,000 during the frenzy are now losing $1,000 to $1,200 per month. Vacancies are dragging too. Homes that rented in a week in 2021 now linger 50 to 70 days. Landlords are cutting rents by $200 to $300 a month or offering multiple months free just to fill units. For a city once seen as a bulletproof investment, Orlando's collapse is sobering. The tourism engine that once fueled demand has turned into oversupply, pushing landlords into bankruptcy and turning the supposed magic city into a financial nightmare. Number 1. Naples. Naples, long Florida's crown jewel of wealth and luxury, is now the single worst-performing rental market in 2025. Rents here have plunged nearly 10% year over year, with the average monthly rent at $5,900, down from over $6,500 just 18 months ago. In some luxury segments, declines reach 20%. This city's pandemic boom was one of the wildest in the nation. Home prices skyrocketed more than 40% between 2020 and 2022, with multi-million-dollar waterfront homes renting for $20,000 plus a month. But that euphoria has turned into despair. Inventory of homes for sale has exploded 94% year over year, much of it investor-owned luxury properties drowning under costs. Insurance is the biggest killer. Annual premiums on Naples' waterfront estates can hit $20,000 to $25,000. Combine that with property taxes of $15,000 plus and monthly maintenance topping $2,000, and landlords are staring at expenses of $6,000 to $7,000 a month on homes that might rent for $5,000 to $5,500. Negative cash flow is not the exception. It's the rule. One attorney reported a 300% increase in landlords seeking foreclosure advice, many of them retirees who poured life savings into Naples real estate. Properties that once fetched multiple offers in days are now sitting for 120 to 150 days with repeated price cuts. Naples proves the rule that markets which rise the fastest fall the hardest. The city once seen as Florida's untouchable luxury paradise has become the epicenter of its 2025 housing crash, where even millionaires can't stop the bleeding.